Hello everybody, welcome to the TraderMerlin Show. It is your hump day. Happy Wednesday, everybody. Hope you had a great trading session out there. We're going to have David Warner on the program, and I see Siraj is already saying, how about the CAD, how about the Aussie, British Pound, all coming in a seasonal sell. What's David take? Well, we will get David's take on those, but first a quick shout out to Skilled Stocksman, Lisa, Siraj. It looks like we lost Les Gold. Used to be our first one in the room every day. He's slipping today, so good to see you, Eric, Matt, Tomasina. Hey, welcome back. You took a little bit of a hiatus out there. Dana, Big Eb, as usual. NJ, good to have you. Chris, my friend from Northern California, and Brendan and Katut. All right, we got a regular group in here. Today's topic is going to be a little bit broader topic. We're going to be looking at things like this: central banks and inflation. My guest joining me from the East Coast today, we have Mr. David Warner joining us. David, how you doing?
I'm doing great. How are you, Merlin?
I'm great. I've been doing so many shows lately by myself. I'm actually really excited to have you on the program. This is awesome.
It's good to be back, man. Anytime. I enjoy coming on here, so it's good to. I like to have these conversations, so it's nice to be back.
I do too. You always alert me to some macro thing I may not have seen. So what's new in your world? I know you're out in New York City and hopefully getting back to some semblance of normal life. How's things been for you?
Yeah, I don't know about normal. I think we're actually kind of even going in reverse again. We've had all sorts of new, I'm sure you've followed it, but like the whole vaccine mandates to get into restaurants and gyms and things like that, that's all like super in effect. So,
well, apparently you got vaccinated because you cut your hair and your beard, so you must have gone to a salon.
Yeah, That's true.
Nice. Well, good. Might be a good time for you to pick up some real estate out in New York City as well. We can talk about that a little bit later on.
Yeah, right.
Let's dive right into it. Obviously, kind of the hot topic now is central banks. And, of course, we'll look at the central bank influence on specific currencies. I know we've got a bunch of people asking about different currencies, and feel free to send in your comments and questions, guys. We're happy to field those. But the talk track from Powell, really since the Jackson Hole Symposium and other members of the Fed, has been, look, we need to start tapering. We got to stop buying mortgage-backed securities. We got to stop buying commercial debt. We got to stop buying treasuries to try to maybe remove some money supply from the equation because inflation is transient and it looks like it's creating a problem. So give me your take on what the situation is with the Fed. We'll start with the U.S. and I know you have your hand on the pulse of international markets much more so than I do. So let's start with the U.S. and work our way across the pond.
Sure. Yeah. I'll tell you just speaking of the currency markets have been probably a little bit more difficult to trade over the last, at least for this summer, just because it's been very tough to kind of pick a direction on the dollar because it's just kind of been a wait and see approach on the Fed, and so a lot of the trends have been very, very sideways for the last few months. And we just had the inflation numbers just recently come out, which were a little lower than what they expected. And usually you would think that would be kind of a sigh of relief for like the stock market, but it didn't really seem to turn out that way. And currencies just really didn't seem to move. But, as far as the Fed is concerned, I think it's, we do have a big kind of Fed meeting coming up next week, which I think I don't know if we're going to get anything out of that. I know the tapering conversation is coming, and, you would think that would have short-term implications for kind of like some dollar strength. But I think, just overall, I think like while the dollar may be kind of neutral or might be okay in the short term, I think overall, I think the dollar still has a lot of stuff working against it.
Well, I'll bring up the dollar here. I've got your video and the dollars. Let's just go dollar full screen. Here's the dollar index. We saw it kind of double bottom about a week and a half ago. That's actually, I can tell you the dead below. That's when I actually closed out my Solana trade and moved into a USD stablecoin. So I know I'm in dollars on that one. Overall, picture-wise, though, what I have on the screen here, David, and now you probably can't see my screen, but I'm going back into really late July of 2020 on a daily on the Dixie. And you're right, it's been just kind of all over the place. No real strong, clear direction. I mean, obviously, as traders, we would appreciate a stronger sense of direction. I really focus in on the last, let's say, 3 months, really from June through now, and it's been a lot of chop and not really making any new lows. So I am slightly bullish on the dollar, and I think that might dovetail into your comments about, potentially stronger dollar going forward.
Yeah, stronger dollar, I think, is dollar strength. I think it will be temporary. I think even when we do get some type of tapering, lift off, or when they actually say the tapering is here and it's happening, it's going to be at a pretty slow pace. We have a lot of big government spending things coming up, and our trade deficit is widening, and those typically aren't very good for the dollar. So I think the dollar is probably, I think we're going to see, more of this sideways, type action, which kind of sucks as a trader, because you don't really I'm only going to look for longs, or I'm only going to look for shorts. It's been tougher. That's
right. I remember when you were just like, buy the pound, well, no matter what it does. And now it's like, nope, not now.
Yeah, exactly. I'm still buying pound, though.
Okay, well, we'll visit the pound. Brendan, he says they won't taper. How are they going to taper? Well, what it is right now is you got, $120 billion per month just of treasuries and mortgage-backed securities. So the first thing that they can do to help fight inflation would be to not create new money. So basically stop buying treasuries and stop buying mortgage-backed securities. So you stop that to the tune of $120 billion per month. And then you also start to sell some of your holdings. In doing so, you take that money and you put it back where it came from, which is just a digital ledger. So you're removing dollars from the money supply. What happens then is you have the same amount of people chasing fewer dollars. What should happen to the dollar? It should, in theory, rise, which is a good point here from NJ. He said, isn't that bad for the U.S. exporter? Yes, our strong dollar is bad for U.S. exporters. It's great for importing, right? Because we can buy more of foreign products, goods, and services, but we'll have to wait and see how this pans out. And Brendan says they won't taper. I disagree. I think they're backing themselves into a corner if they don't slow down a little bit. We're not saying that they go from 100 miles an hour to 0, but go from 100 to maybe 80 or 75. You got to slow it down a little bit and see what the impacts are, right?
They're going to have to slow it down a little bit because, we're getting prints of 5% on inflation, which years ago you'd be now they're looking at it well, it's not as bad as it was. Yeah. We were expecting 5.4 and it's only 5.3. Those inflation numbers are just, we can all see it, food, gas, things like that. Things are just getting more expensive. Speaking of New York, you were just talking about it. Start looking at, real estate rents around here, and they're way more, than they were a year ago. So, that kind of stuff you feel has got to be unsustainable on some level, and they're going to have to taper. And that's the thing about, really all of these central banks. All of these central banks are kind of they've been on this race to the bottom, and then it's going to be crazy to see how they're going to kind of all try to unwind at the same time. So, I don't know. We're getting into things that I've never seen in my entire kind of trading career.
Yeah, well, it's all about, I guess if we learn from history and kind of go off of what they've done, and I agree with many of you. A lot of them are going, you know what? Let's see, Brendan says, stop buying assets. That ain't gonna happen. Well, remember, there's so many different ways that the Fed can manipulate money supply, right? There's specific actions that they can do with regards to their spending. What I think they'll do is they will probably curtail their actions. So when, sorry for my French, when the shit hits the fan because things are all messed up, they can go, well, see, we're not propping the market up anymore. It's not us. Right. But you're right. They could do things to the banks. They can raise reserve requirements. They can raise lending requirements. They can do all kinds of different overnight lending rates. All that type of stuff starts to change. But remember, if the Fed stops buying treasuries, what ends up happening is the short end of that yield curve starts to rise real quick. And there's a bunch of people out there that are forecasting by the end of this year, and I think that might be a bit aggressive, that the 10-year will be over 2% by the end of the year. And I'm like, oh, gosh, that probably would have a dramatic impact for viewers. I will show you. Here is the yield on the 10-year. And, of course, going back into 2020, it was above 2%. So it's not like it's the end of the world. It's just saying that things are getting higher and higher and higher. And that trend that we saw for the past, you could say decades, really, if I make this a monthly chart, right? That downtrend that starts on this graphic back in 1981, do we end up breaking that and start moving up? I don't think we're going to have a huge, I don't think you're going to see 14, 15% anybody. No big deal there. But I do think we could challenge that 3% mark. And if we do get the 10-year up to 3% like that, darn right we're going to start to have some economic problems and just things will slow down. And I guess it goes back to the phrase that, business as we know it will change, because business as we know it has been operating with a 10-year that's, under 1%. Great. Well, now all of a sudden it's spiking up. So those changes, however slight they may be, are going to have a ripple effect through everything. And, we'll have to ride it out and base our investments off of historical actions that we've done. But I am in the camp of you'll see rates start to rise here more and more.
Right.
With specific currencies, now we could, run the gamut here. I guess we could probably start with the dollar. You kind of viewed that one a little bit ago. What's your thoughts on the dollar from an intermediate to long-term perspective?
Intermediate to long term, I still think there's more potential for the downside, and that may not necessarily be in 2021, but I think that our increased spending and I think our widening trade gap, things like that, it's not necessarily good for the dollar overall. And I do think whenever we do start tapering, which would be a dollar positive, I do think that it's going to be at a pretty slow pace. Which I think, what we have seen, somewhat of some dollar strength since May. But then it's just been total sideways since when all of June, July, August. Now we're approaching the end of September. God, I hope we see some move one way or the other in the fall. But it really is going to be on just the pace of tapering. And next week is a big week. I think it is. Let me check.
For the U.S.?
Yeah.
Yeah, for us it's Wednesday. Wednesday is the FOMC meeting. Yep.
Yeah, Wednesday is the big day. I thought it was Wednesday. I just want to make sure. 22nd, right? So Wednesday, the big day. And, hopefully we get some guidance of some kind.
Let me ask you, how do you trade those FOMC announcements? I know everybody does things differently. My viewers know my stance on it. But, while I'm not expecting there to be anything absolutely earth-shattering coming out of that speech on Wednesday, there are certainly volatility spikes, either up or down, I don't know. But how do you position yourself from a forex perspective for those? Are you completely out? Are you already lining up for specific trades?
I have a very hard time staying completely out. But one thing that I have not done, and I just I don't really trade with, I don't really plan trades out really anymore, where I try to pick tops and bottoms through using limit orders. Mm-hmm. It's pretty much market orders only. And my trading has been much more, I don't want to say, it's not like day trading short term where I'm in and out in an hour, but it's just mostly I'm big on whole numbers, as you always remember, but just basically trying to trade from a penny to a penny. So if something's at $1.18, try to take something $1.18 to $1.19, or $1.18 to $1.17, just depending on whatever is happening that day. And to be honest, I don't really focus on any individual specific currency. I'm going to try to trade pound dollar today, which I'm always love the pound, but if it's not kind of around a whole number or something like that, I would just look to another currency that it's around a whole number. So, for example, I can see one that's kind of around one right now. Hold on. And I'm going to remove my drawings, and then I'm going to share my screen.
Cool.
So...
so
here's the New Zealand. Can you see it?
Yep, got your screen. Yep.
Yeah, so it's it's just even if I'm looking at something I can see this one's kind of at 72 cents even, and this is a weekly. Let me change it to the time frame. Doesn't really matter that much.
The New Zealand dollar. So what's drawing you to the Kiwi?
I'm just using this one as an example because it's right at a penny even, and so it's it's a pretty stupid simple thing that I kind of look to do, but if it's right now it's 5:30, it's not really the time of day to do this, but right. I'll look at just basically kind of a trend of the day. Right now, New Zealand's obviously very flat. Most of the currencies were very, very flat today. Most of them were flat, just a very, very boring day. But the idea is that I try to find currencies that are kind of printing around a whole number, so 71 cents. And, basically the idea is that if it's kind of like a green trend that took me into 71 cents, I'll try to go 71 to 72. And if it's a red trend that brings me into 71 cents, I'll try to go, 71 to 70. So it's like and it's very simple. Actually, it's pretty effective. And so I'll use things. Can you still see my screen?
Yep, gotcha. Yep.
Yeah, I just use things like this. This is very much the primary driver of most of my trading decisions. And I just kind of look at the price points, and I just kind of look at the trends underneath them. And I don't try to predict to the future. I just say, well, listen, if it's a green trend that took me here, I'm going to try to say green trend takes me higher. If it's a red trend that takes me here, a red trend takes me lower. And it gets frustrating when it's mixed or it's flat, but that's pretty much as simple as I get. And that's the kind of way that I look at like a Fed day. If I have like a Fed day, I don't try to plot, it's going to go up and it's going to stop here and go down, or it's going to go down, it's going to stop here and go up. Especially around central bank statements, that's a very dangerous game to play, I feel, right now, because if they do make any major changes in policy, new trends can establish, and then it doesn't, every top you pick or every bottom you pick just gets kind of can get blown through, especially the ones that are close.
I remember from when I was younger, my trading career, it was a bit different because Greenspan, right? Greenspan, you really never knew what he was going to say. And then, you moved over to Bernanke and then Yellen, and it's gotten more and more transparent over the years. And I think the challenge is right now it's almost clearly transparent. Like, I think everyone's pretty on board with what Powell is going to say. I don't think he's going to say something from left field like, hey, we know what, we're stopping all mortgage-backed security purchases starting next month. He's not going to do that. So we know he's not going to. Yet I still have this apprehension to trade the announcement, because you just never know the people's reaction to a word or a removal of a word from his talk track. It's just so bizarre the way it works. So, my piece is I don't trade those announcements at all. If anything, wait 15 minutes after the announcement, let the dust settle, and then a lot of times you'll see trends form after that.
I 100% agree. It's the press conferences that really get you. I mean, the statements kind of happen, and then the market reacts a little bit, but the press conferences are the ones that are just like, it is a scary roller coaster. I'm a moth to a flame. I have a very hard time just be like, well, I'm just going to sit on the sidelines, but it's the smarter thing to do, but do as I say, not as I do. But I get what you're saying. Exactly.
Brennan says, so by raising rates, etc., how do you get debt to GDP back on 100%? Remember, that's not the goal of the Fed. The Fed has nothing to do with getting GDP to a certain percentage of it all. It doesn't matter. It's full employment and a stable currency. So that's their two mandates. So, by raising rates as they will be doing, that could start to hurt employment numbers. But right now our employment trend is looking pretty good. I mean, we're almost back to historic lows. Remember back in the financial crisis, when in 2008 and 9, when we had over 10% unemployment, they said, look, you get down to your 5%, that's full employment for us. Well, we're at that right now. So I think we're okay with that regards. And the other one, Brendan, you asked, has the Afghanistan debacle damaged confidence in the U.S. beyond repair? I don't know if you could point at one thing that has damaged the confidence in the USD. Right now, it is still the reserve currency of the world. What I think will... I don't know, is there enough bad stuff that we can do that will damage our USD irreparably, and everyone will finally just go, we don't like the USD? No. I don't think they really care about that. I think it's more about, is the economy strong? Is that the logical choice for the reserve currency? And, that may change here in the future as we see China continue to grow and other countries start to potentially take over. I don't think it'll be a switching or a loss of confidence that happens. It'll just be this one's more suitable to be the reserve currency. But, we could go on and on about the political stuff with Afghanistan, but that's a totally different show. I have to save that for those crazy politics shows. We'll try to stick to a trading show. All right, so... let's go to the British pound, David. Oh, yes, I'll bring you up to the British pound. Why the British pound? Well, you were on the program a while back, and actually, I think I might actually have chart after chart after chart of this, where you were looking at it saying, hey, I'm bullish on the pound, buy the pound. we've just happened something here recently, at least from my opinion, where it's starting to make some new lows. So you see the lows that happened in July, it's starting to break down. And of course, I'm a little bit more of a supply and demand zone trend type of person with regards to making higher highs, higher lows. It recently made one. So I don't know if that sways your decision, or is it still just toe that line at 135?
It's tough right now. I mean, I could even put this on like a weekly chart, and like this was show after show, it was just buy, buy. And then, we've just been kind of stuck in between this $1.35 and $1.40. And it's been frustrating because, I've always gravitated towards the pound. I always go, well, pounds. That's why I trade it. It's one of the, biggest movers out there. And it's just been kind of stuck in a weird range. So it's been very hard to kind of trade it other than kind of what I was just saying was like, okay, well, I'm going to just try to move between, two pennies. Overall, I am still bullish on the pound. The pound did have a little bit of a pop the other day. I just had it on weekly just to make it less noise, but I call it a pop. You can hardly even see it. It felt like a pop because the thing hardly ever moves. But their inflation numbers were better than expected. Like pound and Canada, their inflation numbers were better than expected. Ours came out a little worse than expected, but I have honestly, I don't even really trade as many dollar crosses anymore, just because of the whole like, well, what are they going to do with the dollar? The dollar is the biggest headwind, I think, right now for currency traders because it's such a wait and see. But I still prefer, longs over short. Basically I just have it kind of mapped out here, basically a nickel at a time. But like, if I can get to $1.40, I would try the $1.40 to $1.45 again. Or if it just like, but I'm going to trade it penny to penny. But the only, you can start buying it. If it starts to drop, I would definitely start buying it around kind of the 135 area again, and who knows? Yeah, I mean
that chart you got up tells it's a telling story, right? I mean, we came all the way from 114, just a beautiful uptrend, and of course you were bullish, and now you sounds like you're still bullish, but boy, the last 2 months or 3 months have got to make you feel a little bit not uneasy, but may have changed your tune a little bit.
So annoying is I don't even like it's just been annoying, but most of the pound pairs, they've all been, sideways with kind of like there is like a downward bias to it, which makes it very difficult to just try to, pick a bottom because this is what it's been doing, for the whole summer. But, if I get another shot around 150, I would be trying to buy it around the 150, and same thing, just these whole number, type moves, 150 to 155. I always typically just the overall just optimistic, always try to be optimistic overall. And typically if you're buying things against the Japanese yen, I kind of look at that as an optimistic trade. Overall, if the global economy is doing okay, things are supposed to go up against the Japanese yen. I always kind of looked at it as the kind of the risk play. So if like stock markets are performing well, typically currencies are going up against the Japanese yen, which has been like, it's been a little weird. I don't know if I still have your screen.
I'm watching your charts. Yep.
You are, okay. So, and if I kind of overlay like let's see if this works. Okay. This one's fine.
Okay, comparison between the Aussie and
it's just like the trend. Like the ES, they usually had kind of the same kind of ups and downs, peaks and valleys, but it's kind of disconnected a little bit. Since the recently, which was a little strange to me, but. Anyways, they're supposed to typically move the same way.
How important is something like that? So you're looking at, really, this is just an example of kind of a comparative relative strength analysis. How often are you looking at these types of relationships?
All the time. I mean, I typically, so because like, I use this, I always look at what is the stock market doing? What is the stock market doing? And, usually if the stock market is doing okay, one of my very first thoughts before I even look at anything is I think that I can buy something against the Japanese yen. Right. Particularly, and I use this Australia Japanese yen as the prime example because typically the commodity currencies go up against the Japanese yen when the stock market is performing well, and that's kind of broken down a bit, and it just hasn't really made a ton of sense for me because I've been playing it that way for a long time.
Well, as they say, everything works until it doesn't, and it's funny because you have had this historical relationship between these two, and now it just seems disconnected. I mean, when you see something like this, which one do you think is a dog that wags a tail? Is that the Australian dollar Japanese yen is right and the equity market's going to come selling off here, or is it the other way around where you'll think the Aussie will rise?
It's hard to say because, typically, when it comes to I know even just with, the way that I buy stocks, it's like I'm usually only in buy mode. So it's like maybe it's just like with stocks, you're always just trying to push it up, and currencies, you kind of have that. You're always trying to push one up and push one down. So it's been a little bit weirder. But I always feel that the currency market leads the stock market because you feel like currencies is the closest, is the central banks. It's the money supply. And you would, the assumption is that if the money supply is getting bigger, that money goes into the equity markets or goes into, things that are, prices rise if the money supply is getting bigger, and then it's vice versa, the money supply is getting smaller. So I thought, to be honest, I didn't know the stock market would be performing as well as it has been, with just all the inflation and just the hint of the tapering and all of that. I thought we would already kind of start seeing some weirdness that just hasn't really shown its head yet.
You and me both. I've been saying, it's funny because I've been shorted a couple times, and it seems like every time I do, I take a little bit of a punch in the gut, but we'll survive. Yeah. There was a chat that came through. Look at the New Zealand dollar again. So this one came through. Where was it? I thought NJ says GBP for Kiwi comes out today or tomorrow. It actually comes out in about an hour and 15 minutes. It's at 3:45 Pacific time. You get the GDP numbers coming out for New Zealand, and those numbers, as far as expectations go, well, I think they'll probably do okay. But right now, the expectation is it's going to drop from 1.6% to 1.1%, which would be a pretty volatile or a pretty big miss, I guess, if you mean with GDP. So, again, I'm pretty sure we know the answer to this, but you're probably not going to be sitting there trading that New Zealand dollar in an hour and 15 minutes.
It's hard to say. I'm actually having a class tonight. Just probably one of the currencies that, we kind of look at, but I'm not going to try to plan anything out beforehand. To be honest, I don't really execute a ton of trades in the kind of the earlier evening hours. It's just the currencies really they aren't really moving that much during the kind of that Australia, New Zealand session. And they don't even really move that much in most of the kind of early Japan. You don't really see a lot of currencies really start kicking off until, really the European markets kind of come online. But if it's kind of around, one of these, penny points, which New Zealand is, which is kind of like it's always, anytime I find currencies that are kind of around those spots, I do like to try to trade them. It's very simple. It's just there's 100 pips in between a penny, 100 pips in a penny, and then you're just basically, you're risking 20 to 25 pips. So you have about 4 to 5 to 1. And, you can see, quite often you can kind of connect the pennies. You'll have some that just kind of don't connect, which is frustrating when they just kind of peter out. But, for the most part, it's pretty simple. I just kind of started one, try to get to one either way. And depending on how that stuff comes out, if it kind of prints green, I'll use Forex Factory. I'll use Forex Lives, things like that, just to kind of see what they say about the initial kind of numbers. And it's a pretty simple shot. 71 to 72, 71 to 70, which way it goes.
And a lot of people would make the argument that the pattern right now on that New Zealand dollar is a bullish flag pattern, so more upside potential. So follow that trend and hopefully get some more upside on it.
Yeah, maybe 71 to 72.
And if you use the measuring object, it looks like you'll be going much higher than that. You follow the European central banks. I don't. I just catch a headline every now and again. Is there anything noteworthy on their talk track? Because I follow Powell. I'm pretty much attached to the U.S. markets, but I remember years ago when you were on the Power Trading Radio show, you talked a lot about how Stevens for Australia was, telegraphing his punches and really just saying the Aussie dollar is going here. Anything noteworthy from any central bankers from Australia or the euro?
I think that, listen, New Zealand and Australia have probably some of the more bullish or hawkish central banks out there right now. ECB has been pretty dovish in their stance lately, but I feel like they're starting to get a little bit more hawkish. The pound, actually, the Bank of England just appointed a pretty hawkish guy into the central bank. So if I had to choose one between the UK or the euro as which one is more hawkish, I'm going to pick the UK. Like the euro pound the euro had been making gains against the pound. The pound had not been doing as well as the pound, but I feel like you look at this and it's like, man, this is a freaking pretty strong downtrend when you look at it here, but we've been kind of moving in a bit of a sideways pattern, and I've been kind of looking at this, it's the same thing, just this kind of 85 level as a possible floor, and then seeing if I can go 85 back up to 90. It's kind of it's obviously dipped a little bit below here before, but these are just kind of two price points that it seems to kind of bounce around in between. I do still think, again, I think the pound is the more hawkish out of the two.
All right. Cool. All right. Any other little forex tidbits you want to throw at us? Anything that is of interest out there?
No, I think it's just going to be a wait and see what happens with the central banks. I feel like this next week is probably going to be pretty slow for dollar pairs because I think it's just going to be all eyes on next Wednesday. Wait and see.
All right. Well, you mentioned that you got a class. Did you say you had a class tonight?
Yeah, I have one of my companion sessions tonight. I'm going to unshare this. Just for the signature class that I do. Wednesday nights, I typically have a companion. It's an online thing. We just kind of look at the markets and see if any setups are showing themselves.
Yeah. All right. Yeah. Well, how's that going, by the way? I know we got a few signature series. Yeah. I did a presentation a while back where you got to talk about yours, and I enjoyed your presentation.
Thanks, man. I enjoy it. It's a fun class. It's all online right now. It's 3 days. I have the online class I do tonight is only for people that have taken the signature series. Mm-hmm. I do have a signature showcase tomorrow, which is a little bit of like a sneak peek of, kind of an introduction to what that class actually is. So anybody that's interested, that's tomorrow. I believe it's at 1 p.m. Eastern, but I would check your Online Trading Academy calendars for those people that have access to it.
All right, sounds good. Totally different topic here. It's football's back on. I noticed that we haven't played each other yet, but you're going to go down against my team.
I've already had some bad luck with some players, man. It's not my season, but I will say this:
it's been one game. He's already saying it's not his season.
The season that you and I had last year, I won. So
not this
it's okay
year.
If I don't win this year.
It's all right. Cool. All right, man. Well, hey, are you doing anything? Obviously, near the end of summer, are you doing anything exciting this summer? The fruits of your labor, and go out and travel somewhere? Do anything good?
I go visit my daughter in Texas in college. She's in college in Texas, so I have a couple trips planned out there. Visiting my parents in the paradise known as Ohio. Coming up here in a few weeks. So.
Well, one of these years we'll end up making it down to Southeast Asia, and I can get you over to Thailand. I'm pretty sure you'd like that.
I'm sure I'd love it.
All right, man. Well, hey, thanks for coming on. I appreciate it. I hope everything goes swimmingly for you out in New York. Buy some real estate while it's cheap, and hopefully we'll get you on here in another month or so.
All right, buddy.
All right, take care.
See you soon.
All right. Guys, that was David Warner. He's giving us some Forex insights. He's got a signature series on Forex, which he's doing a companion session tonight. If you guys want to know more information, you can contact TradingAcademy.com. I know some of you are only Trading Academy students. If not, you can find out more information by going to TradingAcademy.com and seeing what David has to offer and join in his signature series group. Okay, so let's see what else I have. Brendan, you have a lot of comments here, but this is actually a discussion that Brendan's doing here for John O'Donnell, who is much more the macro picture. And I think part of the discussion is, how do people view the U.S.? How do people view the U.S. dollar? Is the dollar worth its salt? Look, all fiat currencies are trash at some point. And as John O'Donnell used to like to say, it's who's the prettiest girl at the ugly girl dance or something like that, which is not a PC term. Sorry, ladies, for that one. But it's, which is the fastest horse to the glue factory? Is that how it's a little bit better? Look, the U.S. dollar to me, long term, yeah, I think it's going to do what it has done for the past, call it 100 years, which is just go down. And that's because of central banks. And I agree with a lot of you. I think we should at some point look at abolishing the Fed. Unfortunately, it's so entrenched in our way of lives. And, you look at what the Fed has done, it's made a lot of people very, very, very rich. Has it made everybody rich? No. A lot of people have been left behind on that. And generally, it's the people who are not involved with financial markets. It's generally those people who are not investing, and certainly people who are bad with debt and spending are the ones who get left behind. But by the Fed constantly pumping up and propping up these markets, that rises the equity markets. And, of course, most of us with 401ks, etc., do rather well on it. So I don't see dramatic changes happening this year, but I do think you'll start to see some economic issues next year. Then the Fed's going to have to position themselves aggressively. And how do we protect ourselves against a stagflation type of environment? I saw Big Ed mention stagflation if we start to raise rates. Yeah, I think you will start to see some stagflation. That's a very difficult situation to get out of. Some argue that Japan is still in that type of situation. So we'll have to see how it goes. It was interesting for me to hear a couple of the voting members of the central bank for the U.S. Federal Reserve basically saying, look, we have to start tapering and we should do it as soon as October. So, I'm actually expecting that the talk track will change a little bit at next week's meeting, and we'll hear a little bit more positive side with regards to scaling back purchases of mortgage-backed securities. I don't think that they'll necessarily do treasuries, because treasuries hold the short end of the yield curve down. And if they don't hold that short end down, all of a sudden that starts to rise quickly, and then we really put a pinch on housing markets and the economy. So I think they'll probably let that equation stand with regards to their buying mortgage-backed securities and treasuries every month, but they'll pull back a little bit, maybe $5 billion a month on mortgage-backed securities to get that down to zero. Markets as food's expensive. Who was it? I think it was actually somebody from Biden's team, it's not a Biden or a Trump thing, but I think someone from Biden's team said something to the extent of, if you take out, steak and beef and chicken and eggs and pork, inflation's not that bad. It's like, you idiot, that's what inflation's measuring. It's measuring the cost of food, and you're telling me it's not that bad. So anyway, I hate to make that comparison. Hopefully we'll never get to that kind of a war situation where they start confiscating all of our assets and resources. But yeah, you could make some arguments. And certainly there is no perfect model for government or politics, I believe. I believe there's faults to everything. Just like political parties, there's faults to both sides and there's strengths to both sides. So, it's about which policy do we implement that makes it best for everybody. And that is pretty darn tough to figure out. Anyway, David Warner was our guest today. Again, you can find out more information on David by going to TradingAcademy.com. You can find out more about his classes. He also is on Twitter, although he's not very active. It's at WarnerDollar is the one that the Twitter feed that he uses. All right, for tomorrow. Of course, we got GDP numbers coming out for New Zealand in like an hour, but tomorrow we have a pretty interesting day with regards to economic announcements. You have retail sales numbers coming out, which is a pretty important one. Obviously, I keep stressing the consumption side of our economy, and retail sales numbers have not been stellar. The last retail sales numbers about a month ago were pretty bad. They were worse than expected and did not look very good. And I was thinking to myself, boy, if that trend continues, we could see these markets really start to sell off. And then, of course, that week, all these retail companies started coming out with earnings, and they were blowing out earnings. Like, well, hold on a second. I have retail sales that were negative 1.1% last month, but all of a sudden those companies are really good on their earnings. It just seems like something was broken. So they're expecting it to be a negative 0.7, so a contraction in retail sales numbers again. Core down to negative 0.1. Another interesting piece was we had today the Empire State Manufacturing Index come out. Now that's a pretty big one. A lot of people look at the Empire State Manufacturing Index as a big indicator or guide as to where manufacturing data is going to be. They were expecting it to stay right where it's at 18.1. Came out at 34. So this is, it's not a huge number, but it's way better than expected. So all of a sudden that gave a little bit of a hope for people thinking that we might start to see more manufacturing jobs created. Of course, there's plenty of jobs out there. People just need to go get them. But that's a good one. Tomorrow we have the Philly, I believe it's the Philly Fed Manufacturing Index, and that will be coming out about 5:30 a.m. Eastern or Pacific time. So 1 hour before the markets open, you have retail sales, unemployment claims, and the Philly Fed Manufacturing Index. And you also have housing starts coming out for Canada and a few other major things happening tomorrow. Now, as far as earnings go, really nothing big on the earnings front for tomorrow. I kind of left that one blank because I just don't see anything that's worthwhile. Let me see if I've got any questions that have come in here real quick. Good luck confiscating my stuff, Mr. Government Representatives. Yeah, right? Good luck confiscating my stuff. I think the Americans have more guns than any country in the world. So, yeah, pretty sure that they won't be directly coming into my house to grab anything. Good luck with that as well. But you never know. I mean, this is, again, you talk about them seizing assets. This is one of the main arguments that I make for decentralized marketplaces. If someone can come in there and take your $100,000 that's sitting in the bank because it's in a centralized entity, that's a risk you take. I could do something different, like stay in decentralized markets where they can't touch my money, your Bitcoins and other decentralized assets. So part of it is I'm spreading stuff around, and I'm not planning for the apocalypse, the financial apocalypse, but I'm just preparing and keeping myself in charge of my own assets and my own money, which is why I've fallen so much for cryptocurrencies. I think there's a ton of things. What stuff, Margaret? Well, you look back into the 1930s, what happened in Germany, they were basically taking anything that they wanted, right? They come in with full military force and take whatever they wanted out of the people's houses and saying, oh, we're going to use your house for a base, we're going to use your cars and trucks and tractors and all that. It's ours now, and really, what are you going to do? You're going to either say yes or we shoot you. I really doubt they will do anything like that here in the U.S. It's just the antithesis of what our country was built off of. But could they freeze assets? Could they seize assets? Certainly, they could. They don't enter your house. They can use computers to get into your accounts. Exactly. And that's the point I was making, Kenny. And Brendan and I were talking about this the other day. It's like you have, with centralized marketplaces, where you have your Visa, your MasterCard, your American Express, you have all these financial networks, including your Wells Fargo, JP Morgan. So they could, in a second, snap their fingers and you're completely cut off to the financial system, because they could shut down Wells Fargo and they could shut down your Visa, and all of a sudden it's done. It's killed. With Bitcoin and many others, they cannot do that. And I could still have a means to transact. Of course, they could probably shut down my phone company, and I would not be able to send through the apps that I'm using on my phone if we're going total conspiracy theory out there. But anyway, it's just one of those ideas that as we progress, for me anyways, I progress as an investor and just as a global resident, it's important to me to make sure that people don't have straight access to my assets, especially my physical currency type of assets. So I move them around, and that's one of the main reasons we are into cryptos. It's so big right now. Banks are consistently hacked, but banks are insured. Banks are insured. It's the government I'm worried about. All right, any other last minute questions before I wrap up here? I'm going to try to wrap things up. Tomorrow I don't have a guest on the program. I'm going to have Bill Addis next Wednesday. I think I was going to have Tim Pessett here at some point in the near future, and Michael Young. But right now, I have no guest for tomorrow. There's two questions that came in pertaining to the payment of order flow issues. So I'll probably talk a little about payment of order flow and how that's working. What are some of the issues there? Because there's definitely some big problems with payment from order flow. And there might be some financial institutions that take it on the chin. They're going to get beat up if this happens. And of course, if you don't know what I'm talking about, there's payment of order flow, something that's been going on for a long time. And now they're talking about canceling that and making it illegal to do payment for order flow, which to me would be a pretty big thing. All right, well, I don't see any last minute questions come in here. Yes, Nano Ledger S, baby, right there. Well, you guys have different ones, but I've got the Nano Ledger S right there. I'm a big fan of it as well, although I love putting a lot of my other assets on exchanges where I'm actually collecting yield on those. Oh. Where is Tilly? Tilly is in Kansas City. She's a family woman now. She's got a son to work with and a husband and all this trading, and she's writing books and studying. So she's super busy. I will make a note to try to reach out to her, get her on the program again. I was really enjoying her Tilly's kind of market analysis of the S&P every week. That was awesome. But right now she's just really, really busy. So I'll try to get her back on the program sometime soon. Big Eb says Robinhood will crater. Yeah, that's definitely one of the ones we'll look at tomorrow. But there's a whole list of companies out there that are doing sale of order flow. And I think the ramifications for them could be pretty dramatic. So we'll talk about payment for order flow and whatever topics you guys have. If you have questions, send them on in at TraderMerlin@gmail.com. You can send them to me there. If you have comments, feedback, whatever, send it on in. You can also, give me a little thumbs up if you like today's show. Of course, we've got a regular group here, so I'm not too worried about that. But anyway, anybody new, hit that subscribe button, and I will see you guys on our Thursday show. Take care, everybody.